The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
A.m. Monday morning, 60 minutes to go until the start of the trading week. And we got markets in negative territory, folks, to kick things off. We got the S&Ps right now negative by 29 points, trading at 37.88. We'll start it off with the S&Ps. All the markets in negative territory today. You have crude pulling back a bit. Gold up $2 right now. Bitcoin, one of the bigger stories as it trades dramatically lower. Bitcoin is down $6,000 or 15.2% at $33,465. You're approaching $9,000 from the highs we had just on Friday of $42,730. We'll jump to notes and bonds. Lower price, higher yield, folks. The 10-year right now, we're looking at a yield of above 1.11%, 1.115. To be exact, quite the rising yield right now. Over in Europe, you have the DAX down about 0.8%, FTSE down 0.7%, CAC roll down 7%, as well. Asia, Nikkei's up 2.3%, Shanghai down 1%. All right, jumping over to the S&P, quite the acceleration to record highs to the close of Friday. Sunday night, futures open. We bring it back to a little bit closer to reality. All things considered, folks, we're still sitting at almost 3,800 on the S&Ps. That would basically be almost an all-time high if you take Friday out in the mix, right where we closed at on Thursday. Got the NASDAQ pulling back a bit. Some of the tech stocks getting hit. You have Twitter down about 5 to 8% today, banning President Trump. He was basically banned across the board. Nonetheless, some of those social media sites pulling back a bit. You got the NASDAQ 100 off 106 points right now. The Dow off 269. Salesforce, CRM, they got a downgrade this morning. I had them on my radar. We've had some trades in them in the newsletter, pulling back about $4 right now as they got a downgrade from Piper Jaffray, I think. Nonetheless, trading a bit lower. If you're out there on Salesforce, pretty strong company filling this entire gap here. It's in the Dow. It's a cloud computing company. They're facing some headwinds here, all to do with their last earnings report. Not quite the growth that the market was looking for. Nonetheless, chopping around right near that gap low at 218 so far this morning for Salesforce shares. All right, jumping around to what else we have going on. Commodities. There's your crude contract off a bit. We closed last week. I mean, look at that running crude, right? 52.75. We pull it back to basically where we were trading at about 1 p.m. Eastern time on Friday. You get the gold contract, negative $1. We reached 18.17 last night in gold. You're currently trading at 18.34. Volatility persisting in that market. You get silver up 16 cents right now at 24.80. And we'll jump around to some of the stocks in terms of market drivers. Amazon shares this morning down a bit to 31.50. Microsoft shares down a bit as well, and you're going to see it almost across the board. And as we speak, you're seeing the S&Ps pick up to the negative. We're now down 34 points. You're looking at the lows of Friday. Should be an interesting area. That would be 37.75. Within about 10 points to the downside of where we are now. Again, though, putting it on a daily, folks, I mean, basically at all-time highs so far this morning. Yeah, we're backing off 33 points, but, man, it's been quite a run to the upside right now. Negative days in the market do happen from time to time, folks, believe it or not. Tesla shares holding up relatively well. Quite the acceleration for Tesla on Friday to $880. This morning, we're backing off a bit, but pretty calm considering you get the S&Ps down 33 points. NASDAQ 100's down almost 109. You have Tesla off $15, 2%, basically right where you were trading at as of about 3 p.m. Eastern time on Friday for Tesla shares. All right, jumping around to what else we got going on in the markets in terms of action. So one of the biggest headlines out there, crypto across the board. Bitcoin almost $10,000 off its highs at one point. You're getting to some pretty lofty levels when you have hundreds of billions of dollars of market cap essentially wiped out in 24 hours. I mean, you could argue that all of that was created over a period of about 24 to 48 hours last week. Nonetheless, Bitcoin and other digital coins tanked Monday. $170 billion in the crypto market. We pulled up the chart of Bitcoin. man, it's just kind of interesting. I'm not in it myself in any capacity, but the volatility, you understand why people are. And yeah, I mean, look at last week, you go from 28,000 to 42,000. That is literally a 50% pop, folks, from Monday to Friday. So not too surprising that you give it back, some of it on Monday, to 33,400. Basically all wipes it. I mean, look at these moves, right? You wipe it all out, as in you had a 50% run up in price from Monday to Friday. And meanwhile, in the same sentence, if you held Bitcoin from last Monday, there's your print, 12:45 a.m., you would be break even right now. That's because of the move. I'm just crazy. You know, a 50% move upside in a week. Meanwhile, you could have held it the same day and you'd actually be flat and miss it all out at 33,000. Doesn't mean this is where the elevator stops on the way down, folks. Things look to get a little frothy, and I have to pull it up. Quite the candle forming up here on the highs. I was saying to Tom on Friday, talking about just where we were, that when I first pulled up a long-term chart for Bitcoin, I thought I hadn't pulled the chart back far enough, because at one point, like watch, I'm going to show you if you just take this portion of the chart, okay? This takes on a very parabolic formation without the recent run it's had, right? Well, you expand it out, and it almost looks like you haven't gone back far enough to get that parabolic run in the beginning, because this recent parabolic run is so extreme. Nonetheless, the recent highs of about 22,000, nothing preventing Bitcoin, folks, from pulling all the way back to that recent high of 22,000. We were just there. You're talking about on a daily? I mean, we were just there December 24th, okay? And it's January 11th. Quite the run. That would still put you at basically all-time highs, except for the last 2 weeks in Bitcoin, when things have gotten a little bit frothy. Okay, jumping around to other headlines we have going on out there in terms of stocks moving this morning. Where's Lulu? I got a chart up here on Lulu, because the interesting headline here. So I pulled this up this morning. Lulu forecast fourth quarter earnings, sales top end of the outlook thanks to strong holiday sales. I see the headline, right? I said, Lulu, they're crushing it. Always. That company, all they do is beat. Well, not so much the case, because you get into it, and they got more than that this morning in their forecast, as you have Lulu trading a bit lower to 353 so far this morning. You open at about 365. That's all in the last about 2 hours, folks, that Lulu is trading a little bit lower. Getting into exactly what they're talking about, they said Monday expecting earnings and sales in the fourth quarter to come in the high end. Strong performance during the holidays. Company saw strong demand from consumers during the holidays. I mean, we got the jobs number on Friday. Pretty strong jobs number if you take out hospitality, bars, restaurants, consumer demand, retail, pretty strong. Even jobs added in that sector. Lulu has not offered an outlook for the full year due to the ongoing effects of the COVID pandemic. There's the important part, folks. Market hates uncertainty. Doesn't matter what you did for me the last 3 months. Tell me what you're going to do for me the next year. And Lulu says, I'd rather just not tell you what I'm going to do for you over the next year, and we'll just see how things shake out. Market says, yeah, that's not going to fly, man. We talked about very early on during the COVID restrictions that it was very foolish. I found many CEOs, if you didn't take that opportunity to pull your guidance in so many businesses when there was just so much uncertainty. We're now 10, 11 months into the pandemic. Trends have taken shape. Forecasts are a lot clearer, and so a company not giving guidance, a little bit of pause there for Lulu. Stay tuned, folks. We've got a lot to talk about on Monday Trading. We'll be right back.
Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&Ps minus 32 points, NASDAQ 100 off 114, Dow off about 283. Just before we get to get away from Lulu, I was finishing up their segment. All things considered, when you pull this stock chart up, I mean, we're in a consolidation here, right? We're going to open at 352, so all things in context, pretty strong performance across the board. Things got a little frothy, up to about $400 in September. It comes out with the earnings. We trade all the way down to a low on September 21st. Yes, September 21st of 287, and we're trading at about 352, 353 so far this morning as Lulu, and a little bit of consolidation in that area. All right, in terms of what else we have going on, as you mentioned, as I'm sure you're all aware, if you're up watching some Tiger TV this morning, President Trump no longer on basically any social media platforms for his role in inciting violence and insurrection at the Capitol last week. You have Twitter shares so far this morning. Now, there's the daily. Right, up here near all-time highs. We're going to open at about 47. Okay, so there's 47 on the chart. We got a bid ask of 47.40 by 47.48. There's the acceleration there. You jump over to Facebook shares. I believe they're pulling back a little bit as well. Yeah, they're down to about 261. So we closed at 267. Again, I mean, that's basically the bottom area of their consolidation area they've been in since about the beginning of October. You could call it between about 260 and 280 for Facebook shares. And we'll see where that story goes. All right, in terms of what else we have going on in the markets, I'm going to slow down. You have Gilead. They raised their full year 2020 earnings and outlook as a surge in COVID-19 cases raises demand for its remdesivir treatment. Gilead now sees or Gilead, maybe, earnings per share, $6.98 to $7.08. They were looking for $6.25 to $6.60. Currently expected by analysts to report full-year earnings of $6.60 per share. Will report on February 9th, as you'd expect when they upgrade the expectations for their earnings coming out in about a month. There's the bounce off the bottom, and you're going to open barely higher, actually, on that news. I mean, yeah, you could say higher. The market's down almost 1%. They're up 87 cents on pretty strong updates to the expectations coming into their next earnings announcement. I'm going to take that opportunity just to jump over in terms of COVID, talking about remdesivir. You see the acceleration that Gilead's getting because of the need for treatment over in England. their medical chief warning the next few weeks are going to be the worst. A lot of people saying the same thing about the U.S., folks. Be safe out there. Wear a mask. Social distance if you're around people who are high risk. It's a slow rollout of the vaccine going on in Florida. Basically, counties on their own. Many states struggling, but we will get there. It's only a matter of time. I imagine over the next 1 to 2 to 3 months, possibly, that you're going to see that acceleration ramp up as more vaccines become available, as the availability becomes more known. So much is lost right now with the conversation in terms of people not being aware, myself included. It's not on them. The messaging from the government entirely, as it's just a mess. So be safe in this period of time, folks. And because we are nearing the end, but man, things are very rough right now. England facing some of the worst of it. When you look at the U.S., we ain't far behind. I mean, look at these numbers. Daily tests is up as it should be. Daily cases, I mean, you have numbers approaching a 7-day average of 250,000 with single days eclipsing 300,000 positive cases. Current hospitalizations on the rise as well at 130,000. Unfortunately, death tolls, as has been the case, lagging yet accelerating as well, with over 3,100 deaths every single day right now in this country. And that is the average. And when we're spiking higher, that average is yet to rise, folks, when you look at some of these numbers. 3,000, 4,000, 5,000 people every single day. Please be safe out there. Even in Florida, you're seeing rising numbers. We had almost 20,000 cases in terms of the 6th, the 7th. There's some weird lagging going on here with the holidays in terms of January. This is Florida data we're looking at now, okay? Biased in Florida, but we have a lot of residents and listeners in Florida as well. So some variants to have to do with the New Year's holiday, as you may expect. So maybe some of these cases coming in high here, maybe they normally would have been around these few days had there not been the holiday. Nonetheless, we're dealing with percentages, 12, 13% positive in a big way. So please be careful out there. Let's get over this hump. All right, back to stocks making moves this morning. So you have, of course, Google, Amazon, Apple, all of them removing Parler. One thing I don't understand, and I was talking to friends this morning, it's difficult sometimes to understand what kind of hate and division the president is playing off. And I understand he got booted from all these platforms, so that is problematic for him and his followers, some of them involved in the armed insurrection. But Section 230 shields social media companies from lawsuits. If that is done away with, and please type it into the chat, contribute, because I'm curious how this goes out. If you do away with Section 230 and social media platforms then become legally responsible for anything anybody posts on their platforms, I don't understand how that would then help President Trump, because there's no way that any company would allow the president's words of inciting violence through lies and fraud to be posted on their site if they were prone to lawsuits. Now, I understand they're saying that they're being unfairly censored, okay, but do the math, folks. If you think that any company is going to allow the rhetoric that's going on from the president in particular, if they are legally liable for that rhetoric, I don't know how that plays out. I don't know. I mean, it's caught wind, it's caught fire. He unfortunately has the heartbeat of his base in tune. And I just don't get how that plays out, because if anybody is liable for the things Trump says, there's no way they're going to keep those on their platform with what happened, especially last week. So I don't know, but it's out there. We'll see what happens. AT&T, they've designed a new payment plan for movies that appear in its HBO Max service. Always interesting, getting back into stocks here. The streaming platforms, right? Talking about, I've been a huge bull in Disney, especially AT&T, Time Warner, HBO Max. They're really making some headways here with constant reporting. First, they said they're going to release all their movies, main motion picture movies, in terms of in box offices, and then also on streaming at the same time. The plan lessens the ties between payment levels and how a movie performs at the box office, given the impact of the pandemic. So it's a new payment plan, basically, talking about that usually people are getting paid probably for how it's performing in theaters. So Time Warner already saying, listen, we understand that we're not going to be pushing out these these movies to the same theaters. That is going to impact the box office numbers that normally would come, that might be hinged on payment plans for whether it's directors, actors. You have a piece of the pie. You got a couple of points. We always hear the stories of actors that take some percentage of the revenue versus taking a salary, and you do it in some movie that just goes gangbusters, and they make all the money in the world, as they deserve it for some of those. But that's less likely to happen when you have these companies, and rightfully so. I mean, imagine if you're in a movie that you had planned to release in the box office, and then HBO says, you know what? That benefits you, but we're just going to take it, put it on our platform. We're going to grow our subscriber base off your movie, and then we're going to profit from those same people for years to come as they're on that recurring subscription. So it'll be interesting to see how that landscape changes as the movie services like Time Warner, and they're being really bright in terms of creative, how they're trying to crack into this, using those movies to grow their base, but then how are you going to pay those movies in the same way? We'll find out. Stay tuned, folks. We'll take a look at AT&T when we come back. Trading a bit lower this morning. We got a lot to cover. Stay tuned. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the markets trailing off a little bit. Negative prices. S&P's off 34 points right now. You see the action we had overnight. All negative action, really. We chopped around between about 3790 and 3800 for most of the overnight session since about 10:30 p.m. Eastern time last night, all the way until about 7 a.m. this morning. But since then, we've dropped 17 points in the S&Ps. As I mentioned, the lows we're talking about only a few points below. I mean, you're really talking about 3780. We touched that level twice, and for a brief moment, we were down to about 30. 775 in the S&Ps. I mean, exceptional time when you think about, folks, I went over the COVID numbers, pretty stark numbers when you're dealing with possibly 4,000 to 5,000 people are going to start dying a day if this thing persists and continues to rise. Hopefully we get a hold of it. But, man, it's January 11th. This is the season when people are inside, and it's a tough season on that deal. Point being, you see that. You see impeachment proceedings possibly starting in the House. You see a time of unemployment and hardship. But guess what? Stimulus. That's the next conversation. That would be the explanation of why we have markets basically making all-time highs this morning with everything else going on that we discussed. We got to talk about the VIX as this market pulls back a bit, and we're seeing a little bit of a pop. Looks like the VIX, and it might be rightfully so, not very comfortable getting below about 21 in this market when we have so much reality left to come to fruition from all the expectations built into the market. Meaning the market right now is priced for stimulus, and it's priced for opening back up once we get over the vaccine hump. We're already seeing the wave of cases we expected, and we're seeing struggles to get the vaccine out. Do we see a little bit of volatility in the market, folks? Remember these runs we had to higher territory, okay? When we made it up to 3,600 in September, we were back to 3,200 within 3 weeks. We almost made it back up to that same level. I imagine we have a little bit of volatility. The closer we get to that opening back up, though, man, talk about fear and missing out. Who doesn't want to be in the market when the world opened back up in a post-COVID reality? Stay tuned, folks. We got our man Larry Pesavento. He's coming up next. How about that DAX right now, down 0.8%? Stay tuned for Larry, folks. Live programming all day. Be right back.